afternoon, everyone, and welcome to Stock Market Today for Thursday, February 20th. Stocks retreated across the board, but the indexes did manage to close off lows and a lot of wild action underneath the surface. And joining me now to discuss is my colleague, Ed Carson. Ed, what do you have for us today?
Yeah, I want to take a look at Palantir, Royal Caribbean, and Mastercard.
All right, sounds like a plan. We will get to those, but first, let's analyze the major indexes, which don't tell the full picture of what happened today, but important to get the context here. The S&P 500 down about 0.4% by session's close, off of lows for the day. Same for the Nasdaq. The tech-heavy index was down about 0.5% by the end of the day, closing just below that 20,000 level. Meanwhile, blue chips, the hardest hit today, the Dow down about 1%, and it looks like it bounced the least off of its lows, at least versus the S&P and the Nasdaq. And then if you take a look at small caps, the Russell 2000 down about 0.75% on the day. So Ed, if you just looked at the S&P 500 here, nothing's looking too concerning.
Yeah, nothing's looking too concerning at all, and even the Dow was mostly probably a lot of that was Walmart. So
Right.
it's like, so the S&P and Nasdaq they looked fine, and yeah, you'd like to keep on surging, but this is fine. But if you're looking at the market, you want to pay attention to the market, but that means following the major averages and the leading stocks. And so we'll get to some of the leading stocks, but those were still struggling. This was the first time, and we did fall. I mean, it wasn't pretty for a while there. The Nasdaq was down more than 1%, so it's great that was not looking pretty, especially with some of these, a lot of growth names were down 8, 10%, with many of those after falling significantly yesterday. But yeah, came off lows. So on the indexes looking fine. But it does feel like a time that investors might just want to be pulling back now, whether that's just because they're selling some shares or because they're just dumping some stocks that were not working. That might be what you need to do. But it seems more like a time to be a little defensive, but that could quickly change.
Absolutely. Okay, let's take a look at RSP. This is a measure of market breadth and also not too concerning by this measure here, down just 0.25% on the day off the low. So this is your average S&P 500 stock. But we have concentrated portfolios, a handful of stocks usually, Ed, as active growth investors and in growth names, which can have a little bit more heat or volatility to them. First, let's take a look at the NASDAQ 100 here, equal weighted, down about 0.6% on the day, while the NASDAQ 100 down about 0.4% or so. But really, it was the growth area that was hit hardest today. A couple of ways you can look at this: FFTY, a basket of top growth stocks, down 3.5% today after some recent notable outperformance, Ed. And then if you look at ARKK, down 2.7% today, this area of the market also getting hit hard today.
Yeah, and so we're really seeing, I mean, it's not only this, but it really seems to be those high valuation stocks, the ones with 100 PEs or more that are really coming to pressure. Now, some of these have been the big winners. So you look back over the past year, it's a blip. But if you're a recent investor, not so much. Yeah, I mean, there's other stocks that were not super high valuations, but that's part of it. So that's why even QQEW looks fine, or QQQ. It really is that more speculative, really high octane. Again, we're talking about you generally taking a portion of the recent gains. They've been big winners, but that can be when there's trouble, the really high value, big moving stocks are often the biggest losers on the downside.
Right. And so I think today it seems like, okay, we had the indexes close off lows. So for stocks that suffered damage today, well, how did they close? Did they close in the upper half of their trading
Yes.
range for the day? Were they able to battle back, or were they weak? And we want to be focusing on the stocks maybe that were either up on the day or able to really withstand the downdraft that a lot of other stocks suffered.
Yeah, I think that's absolutely the case. And it is interesting. While we talked about the high growth, there was one sector, SMH, the chips held up pretty well. And I think that's important. that actually rose. Now, some of these names have not been that strong, but some of the AI chip names did okay today, including NVIDIA heading into its earnings, and then some non-AI chips did as well. But so this has obviously not been where there's been market leadership, but it is interesting that that held up, and
Hmm.
that's one reason why QQEW probably held up
Right.
is because the chips, which are not leading, uh, did fine today.
Yeah, an interesting note there for sure. And here's a look at the 10-year treasury yield. So even coming off a little bit today, this definitely did not help stocks.
Yeah, that did not help, but it's still sort of in a range. It really didn't change things too much, and I think this is probably a reflection of the stocks because I don't think the economic data may have been a little weak overall, but I think a lot of this was just a reflection of stocks falling and bonds falling, yields falling as a result.
Okay, let's take a look at a couple of tickers here. Palantir, speaking of, where did it close on the day? And full disclosure, I do own this and trimmed about a quarter of my position yesterday and wanted to see how it acted today. So it did shed another 5.2% in heavy volume, Ed, but I like the support that it got here.
Yeah, that's really positive to see, and I do think trimming makes a lot of sense. It's scaling a little bit because if this had sold off and closed at the lows, it'd be a lot worse. Now,
Yeah, I would
so
have
I
cut
think
more.
would have cut more, and I think if you didn't cut yesterday, it would have been perfectly understandable to sell near today's
Mhm.
lows, honestly. I mean, you could have waited, but you
Feel
could
the
have said,
pressure.
"Well, wait a second." And it's nice to get that started because then it's like if you do sell near the top, you can tell yourself, "Hey, I sold some of this near the top," and you're hoping that it bounces back. You're hoping that you're wrong. You're hoping that that sale is a bad trade. I mean, in hindsight,
Ultimately, yeah.
yeah, hindsight, yeah, not, but it's a way to preserve yourself. It's a way to make
Yeah.
sure your mental capital is ready. So we'll see. This if this one could come back down tomorrow. I'm not predicting it. This
Mhm.
looked a lot better than a lot of names, but sometimes you get that 1 day bounce, and then it's like, well, then it rolls over.
Right.
So we'll see. It was very nice to see this one come off the lows intraday.
Mhm. Closing range of 90%. Of course, that's not the true range. There's a little gap there, but still a closing range of 90% on a day like today for a stock that lately has had as big of swings as this one has is notable. But like you said, it's just one day. I think the 21-day line here is an important level to watch. That's around 101, 102. And then that round number at 100, not only is it a psychological level, but that's right where it gapped up to on earnings. So, can that round number be an area of support as it works on what now looks like is going to be some sort of new base?
Yeah, that seems like you're right. There's just that it really seems like an incredibly important level right here.
Okay, moving on, let's take a look at RCL. Some choppy waters here, not all smooth sailing for the cruise line stock, which was setting up nicely headed into Thursday's session, but today taking a dive down almost 8%. Heavy volume did manage to close off lows. Let's check the closing range of this one, 40%. So, not terrible. 40% I would say is somewhat positive in terms of supporting action on a down day like today. Closed fractionally below the 50-day line. Ed, what's going on with the cruise line stocks?
Yeah, and this is hitting some of them, not all of them, but the Commerce Secretary came out, I think, last night and said, "Hey, we want to crack down basically on the taxes, making sure that they're being paid." So I'm not exactly sure what taxes aren't being paid or what might not be paid fully, but that really hit these stocks today. And I think you would have wanted to sell a fair portion of this because this was coming way below the buy zone. So even if you bought early, you were
Mhm.
down. I mean, there was not really a way to get out of that. And you would have, if you bought early, you saw a big gain get wiped out. If you bought in the breakout, you were down 10% at one point. I mean, it's just like that's just you need to take action. So at the very least, you wanted to, I think, taking significant sale, waiting to see how it closed. Now, maybe you hold it here, but it is closing below the 50-day line. It wasn't great. So you could have been all the way out of it. Certainly want to be substantially reduced. I think at the very minimum, because it was setting up. Maybe this bounces back. We just don't know. Some of these stocks will bounce back, but a lot of them will not. I mean, that's just and so if it always could set up again, if you sell out and then it sets up again, you can always buy it back. You're protecting
Mhm.
yourself from a big loss, even if you end up paying a little higher price in that regard.
Well said. And it looks like right now it's right at that 10-week line. So for traders who bought the cup with handle last year, let's see what month that was. Last September and held through the most recent base. They're probably holding here.
Yeah.
At least some of the position, maybe trimming today, like you said, and then waiting to see by the end of the week if it continues to hold that 10-week line. So all
They
depends on where you got in.
Thank you very much for putting in that perspective. That's really important. For short term, it was very different from longer term traders here.
But still, I mean, even if you like setting your sell rules or and hold rules using a weekly chart, I do think if you are an active trader, you can't be blind to the fact that of what happens on the daily, right?
Yes.
Because that can be the beginning of the end sometimes. So you don't want to just be not taking any action if you need to, even, if you're more reliant on the weekly chart. So, at
Yeah.
least that's what I tell myself.
That's a great strategy.
Trying to reiterate to myself. All right, let's take a look at Mastercard. This was our stock of the day today. And even with Walmart earnings disappointing in the reaction here for Walmart down 6.5%, potentially signaling some signs of a weakening consumer. Well, that's not hitting the likes of Mastercard, Ed, just down less than 1% on the day and light volume trading very tightly here. So it doesn't seem like investors are concerned about a potentially weak consumer for this type of business.
Yeah, and Mastercard and Visa are the companies that they don't make money off of what you're buy. They win on the number of transactions. So if retailers get their profit margins pinched, but they're still ringing up the register, they don't that again. I'm just trying to think about why.
Mhm,
Why wouldn't Mastercard? Why wasn't there a sell off? And maybe there will be. Maybe maybe tomorrow somebody will say, you know what? Why are these cards up here? But there's also travel. I know travel had a weak day today, but travel is strong, and that's good for
mhm,
cross-border payments. Those are very juicy for margins for Mastercard and Visa. And on a weekly chart, I think this has a 3 weeks tight. It may not be showing up on for whatever reason, but that is a 3 weeks tight and working on a fourth. So that's really tight action here. Maybe it can reestablish a long-term leader status. It does have pretty solid earnings growth for years. It just hasn't really outperformed. And sometimes it finally kicks in. It's like, wait a second, this is doing well. Like certain names, but
mhm.
this is solid profit growth that really hasn't dropped off. So it wouldn't be surprising to see that go on a real run after just
Yeah,
keeping pace. But that is something to keep in mind. It hasn't really outpaced, but there's really solid earnings growth and
mhm.
continuing. So it certainly could do that.
Yeah, it has outperformed since last summer.
Yeah.
So that is something to point out there, even though if you take that bigger step back, last couple of years haven't been outstanding. And I think the other thing to note here, Ed, is with all of the volatility that we're seeing in growth and tech and in many areas of the market, for traders who still want to be involved and want to look for stocks that have the potential to outperform, going with something that has lower volatility, a little bit of a steadier name like a Mastercard seems appealing in this type of environment. That's not to say that this stock could never have a big swing. I mean, if you go back to last August, it had a 4% decline in one day. That's the one that stands out the most to me on this chart as the biggest percentage decline. Maybe there's another one, but if that's the type of stock that you're in for, whereas in the last 5-6 months the worst single day decline is 4%, that might put some investors out there at ease a little bit.
Yeah, and that can be a good way to, just have a mix of things. And it depends on your risk tolerance, but having a mix of stocks that are diversified in terms of their sector or theme, but also maybe diversified in terms of how high octane up and down they are. And this has been a steady performer that is not as wild.
Yeah. Okay, let's take a look at some stocks with earnings out after the bell. On the upside, Mercado Libre, South American e-commerce company, up 14% here at a messy looking base, but since December it's been making a comeback to recent highs, and it looks like so far investors are liking the quarterly results.
Yeah, it really beat last time. I was seeing here, it's like it came in with 12.61 a share, beating this is gap, but it beat by over $5. So that's a pretty good beat. They had a horrible miss last time. So I think
Mhm.
people were worried about that. But I guess in Argentina, where it's actually sort of headquarters, Messi is a positive thing. And that,
See what you did
but
there.
yeah, so yeah, I mean, it's showing strong action, but yeah, it's been a wild one. Another name that's been out there is Booking Holdings. Uh, that one sort of pulled back a little bit, but maybe that could be an early entry here,
Yeah.
and it's not too far from the actual buy point either. So we'll see how that because
Mhm.
that was earnings after the close. Another Brazil name because Mercado Libre really has its biggest market as Brazil is New Holdings. That was weak. Just don't really have to take a look at that for very long. But Sprouts Farmers Market is maybe one other name. That one just falling a little bit. This one's had a huge run. Again, this is one of those names that just had consistent, very solid growth for quite a while. And so pulling back, 3% loss would not be the worst thing here. But those were some of the names
Mhm.
that were notable or after hours.
Yeah, and Ed, you shop here, right? At Sprouts?
Shop a lot. I shop there every week. It's so I may be a big contributor to their bottom line. Uh,
Yeah, there you go. You're contributing, let's see what tomorrow looks like and maybe a potential test of the 21-day line. Maybe eventually it sets up some sort of shelf. Every time I feel like I've looked at this stock when it has been potentially buyable, I don't have that level of conviction because I
yeah.
have a Sprouts. I don't shop at a Sprouts, but and it's already gone on a big move. And I feel like every time we've said, well, how much further can
Exactly.
a grocery stock go, and this has proved us wrong every step of the way.
Though it does seem like if you want to buy it, like getting it off of a base and going like sort of
Mhm.
near the 50-day line, 10-week line
Right, those
has
are
been the way
those
to
are the
go.
times I've looked at it and haven't
Yeah.
bought
And
it.
so, yeah. And exactly. We've all looked at it and I keep on passing it, it's like, and it's too, but yeah. So again, this is another one that sometimes it doesn't seem, wow, that's not as exciting as names, but boy, is that delivered real
Mhm.
growth for investors.
It sure has. All right. Well, thanks so much, Ed, for walking us through all of that. We appreciate your insight today.
Thank you very much.
And thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details on that. I was supposed to be flying out to New York today to participate in Barron's Roundtable tomorrow. And unfortunately, due to the winter weather here in North Carolina, I'm having to reschedule my trip. So you will see me tomorrow on IBD Live and Stock Market Today. So I look forward to seeing you all there. We'll see you then, and we'll see you tomorrow after the close.